In recent years, we've witnessed some unexpected economic shifts, with one of the most striking being the rise of Tasmania's household income, surpassing that of Victoria. This shift marks a significant change in the financial landscape of Australia, highlighting how dynamic and unpredictable economies can be. The COVID-19 pandemic played a key role in this, with lockdowns and restrictions impacting household incomes and economic stability across the country. While some states have managed to recover faster than others, Victoria's prolonged and severe lockdowns led to a notable dip in its income levels, dropping to 10% below the national average. These local shifts in Australia are not just confined to its borders, but resonate with global financial trends. As the world's economies continue to grapple with the aftereffects of the pandemic, the Australian situation offers a snapshot of how external events can reshape economic rankings, influencing everything from household income to government debt. The effects of these changes will have lasting consequences, both for the Australian economy and for other countries watching how these trends unfold. Tasmania's rise in household income is one of the more surprising economic developments in recent years, with an average annual per capita income now surpassing that of Victoria. It's clear that the economic landscape is shifting in unexpected ways. This change reflects a larger trend, where some regions are seeing growth, while others, like Victoria, are facing financial setbacks. Victoria's income levels have fallen to 10% below the national average, a significant drop that's largely attributed to the severe lockdown measures during the COVID-19 pandemic. To put this into perspective, let's compare the different states in terms of household income. South Australia, often described as the home of Australia's poorest residents, continues to struggle with lower income levels, while states like Western Australia, WA, and New South Wales, NSW, remain among the wealthiest, consistently reporting higher household income figures. In this context, Victoria's economic performance is particularly alarming, as it was once considered a leading state in terms of household wealth. Imagine a race where each state is a runner. WA and NSW have always been at the front, but Victoria has fallen behind, especially after the pandemic. Tasmania, once trailing in the pack, has suddenly surged forward, showing that a state's position in the income race can change unexpectedly. This shift serves as a stark reminder of how vulnerable economies can be to both external factors, like a global health crisis, and internal decisions, such as government policies on lockdowns and business restrictions. The COVID-19 pandemic has had far-reaching consequences on economies worldwide, and Australia is no exception. In particular, Victoria's prolonged and stringent lockdowns were a major contributing factor to the state's economic downturn. While other states began to recover more quickly, Victoria faced significant challenges. Its extended lockdowns led to a sharp decline in household income, with many individuals and families seeing reduced earnings due to job losses and business closures. This drop in income, coupled with rising unemployment, caused a ripple effect throughout the economy, pushing household incomes below the national average. The economic damage from the pandemic didn't stop at household income. The state's finances were also hit hard, resulting in a dramatic increase in government debt. Victoria, which already faced financial pressure, saw its debt levels rise sharply as the government increased spending to support businesses, workers, and healthcare services during the crisis. This surge in state debt became a major concern, particularly as other states, like New South Wales and Queensland, managed to balance their budgets more effectively through early recovery measures. This broader economic ripple effect of COVID-19 is still being felt. State governments across the country are now grappling with the task of managing and repaying this increased debt, while simultaneously attempting to stimulate growth and ensure economic stability. For Victoria, the pandemic exposed vulnerabilities in its economic structure, highlighting the challenges of managing public finances during a crisis. The impact of COVID-19 is not just a short-term issue, it will continue to shape state economies and government policies for years to come. State government debt in Australia has been a growing concern, particularly since the onset of the COVID-19 pandemic. The economic fallout from the crisis has left a noticeable divide in how different states are managing their finances, with some struggling more than others. Victoria now holds the dubious distinction of having the highest state debt, a situation exacerbated by the prolonged lockdowns and large-scale government spending during the pandemic. To support businesses and individuals, Victoria's government had to increase its borrowing, pushing its debt to levels that are now significantly higher than other states. South Australia, which has long been grappling with economic challenges, finds itself with a similar financial burden. Although its debt is not as severe as Victoria's, New South Wales, in contrast, has managed to keep its debt under control, despite facing its own economic pressures. However, even New South Wales is now dealing with an uptick in borrowing, as the pandemic has left a mark on every state's finances. The disparities in state debt levels highlight the different approaches and outcomes each state has had in responding to the pandemic, as well as the varying ability of each state to recover. The pandemic has worsened these financial imbalances by necessitating significant emergency spending. For example, Victoria's decision to implement some of the strictest lockdown measures resulted in a larger economic slowdown, which, in turn, required more substantial government intervention. This has not only increased state debt, but also created a challenge for the state's future economic recovery. The growing divide in state debt matters because it impacts the long-term fiscal health of each state, influencing everything from infrastructure projects to the ability to provide essential services. For residents, it means that their state government may face tough decisions in the coming years about how to manage debt and stimulate economic growth. The financial markets have seen a mix of performance across different sectors and regions. In Australia, the stock market showed a positive trend, with significant gains in the pharmaceutical sector, particularly for companies like Paradigm Boff Pharmaceuticals, which saw a notable increase of more than 40%. Retail stocks also experienced a pre-Black Friday bounce, indicating a boost in consumer spending leading up to the holiday season. These movements highlight the resilience of certain industries, particularly healthcare and retail, despite ongoing economic uncertainty. Looking internationally, markets in New York and Tokyo reported upward trends, reflecting a broader sense of optimism in global equities. However, the situation was different in Hong Kong, where stock prices fell. These regional disparities suggest a varying pace of recovery and economic conditions worldwide. For UK investors, these trends are important to watch, as shifts in major global markets can influence their portfolios, particularly those with international exposure. Turning to commodities, the market saw an uptick in prices for gold, iron ore, and oil, reflecting increased demand and supply chain constraints that have affected global production. These rises are often seen as signs of economic recovery or as a hedge against inflation, particularly with oil prices climbing. On the other hand, Bitcoin, despite its earlier rally, experienced a slight dip, hovering just under the $100,000 mark in US dollars. While still highly volatile, Bitcoin continues to capture attention from both institutional and retail investors. The fluctuating nature of cryptocurrency makes it a noteworthy point for UK investors to monitor as they navigate market trends and consider their investment strategies. Despite global economic fluctuations, the Australian dollar has remained relatively stable, holding its ground against the US dollar. This stability is noteworthy, especially as global markets have been reacting to various political and economic events. The US dollar, in particular, has shown signs of weakness following political developments in the United States, such as the nomination of Scott Bent as the new Treasury Secretary. While the nomination itself may seem like a domestic matter, its implications extend far beyond the US borders. Scott Bent's reputation for fiscal prudence has raised expectations that his policies may stabilize the US economy. However, the global markets reacted by causing a dip in the value of the US dollar, which has a ripple effect on currencies worldwide, including the Australian dollar. A stronger Australian dollar can make Australian exports more expensive, but it also signals confidence in the Australian economy amidst international volatility. For UK investors or those tracking currency markets, The interconnectivity between political events in the US and currency movements provides valuable insight into how global markets react to leadership changes and policy decisions. This stability of the Australian dollar is significant for global trade and investment, as fluctuations in currency can heavily impact international business transactions, investment returns, and commodity prices. The continued monitoring of global political shifts, especially in major economies like the US, will be critical for understanding how currencies like the Australian dollar respond to broader economic developments. For UK pensioners and investors, staying informed about these dynamics can help in making informed financial decisions that account for potential currency risks and opportunities. The key lessons from Australia's economic shifts provide valuable insights for the UK as it navigates its own post-pandemic recovery. The rise in Tasmania's household income, coupled with the impacts of lockdowns in Victoria, shows how vulnerable state economies are to both policy decisions and external shocks. The UK, too, has seen regional disparities exacerbated by COVID-19, with some areas facing more significant economic challenges than others. Understanding the dynamics at play in Australia offers a blueprint for the UK's own recovery efforts and highlights the importance of addressing inequalities between regions. One crucial takeaway is the need for careful management of government debt, particularly as the UK government grapples with its own rising fiscal deficits. The debt levels seen in Australia, especially in Victoria, underscore the long-term consequences of large-scale spending and economic shutdowns. For the UK, balancing stimulus spending while ensuring a sustainable fiscal future will be a key challenge in the coming years. In addition, the Australian stock market's resilience, particularly in pharmaceuticals and retail, points to the sectors that might thrive in times of economic uncertainty. For UK pensioners, this could suggest opportunities for investment diversification, with healthcare and retail stocks potentially offering some stability during volatile periods. Similarly, the fluctuations in commodity markets, particularly with gold and oil prices, provide important signals for those looking to protect wealth against inflation or economic instability. Finally, understanding the global context of currency fluctuations, especially with the US dollar's recent instability, can provide UK investors with a broader perspective on how political events and economic policies in major economies can influence currency markets and global trade. Staying informed and adapting to these trends can help mitigate risks and seize opportunities, ensuring financial resilience in uncertain times. By looking at the lessons from Australia's economic landscape, UK pensioners and investors can gain valuable insights into managing their finances, navigating regional disparities, and preparing for a future shaped by ongoing global changes.